the market on close. I'm Sam Vardas, live from the floor of the New York Stock Exchange. It's time now for overlooked stocks. The shares of Box are jumping after earnings despite a relatively in-line quarter. I'm joined now by Tsilis, a senior markets correspondent, to get us across this one. What did we learn from the earnings, and what do you make of the reaction today? We're seeing it jumping 7%.
Well, I think the reaction is important because if you look at least in the pre-market or post-reported earnings, yesterday afternoon, the stock actually moved down, but it traded, slightly higher as we moved towards the open and, of course, to the end of the day. And I think that's meaningful considering the business, the outlook, and the place that essentially Box Incorporated has in the marketplace for both the storage and cloud. But I think what's important here is how the story for this company is actually morphing into sort of a collaborative software business, but also a data structuring business alongside an e-signature business. So for those who don't know the company, it's really a longstanding company that's been in traditional cloud storage. When it comes to storage, you think about Google Drive, but also, Microsoft OneDrive, or even for the enterprise storage like Azure. And this is a company much smaller than those bigger businesses that is in both cloud-based content management and storage, but they're also moving more so into software as a service and enhancing their technologies for productivity workflow. So that puts it in the same camp as companies like Atlassian, Simple Team, maybe Slack, which we know was purchased by Salesforce. But nonetheless, the other thing about the business is they're moving slightly into cybersecurity, including data protection, data warehousing. But interesting enough, one of the things I noticed when I looked at the business, Sam, is that they also have an e-signature business. And this is kind of important, at least in my view, that if you look at the e-signature business, it really comes down to just a few major players. And those major players include companies like DocuSign, Adobe, as well as Box Incorporated. So for what it's worth, I think that's important for, the industry to sort of consolidate in that aspect. But you did mention the company delivered an inline quarter, and if you look at the EPS, the numbers at around 31 cents were still down, about 32% compared to 45 cents for the same quarter last year. They did beat the estimates for sales just fractionally by a couple $1 million to $301 million, but nonetheless, there was an increase of 9% compared to last year for the same quarter where they generated $276 million. Now, if you look at the breakdown of the internals of how they generated the numbers, their billings growth actually came in quite ahead of estimates. Those billings numbers were only expected to be around 8%, pretty much in line with their top line sales estimates, but they actually came in around 12%. And with that said, the net revenue retention rate, which is really a function of how many customers are essentially spending versus those that may be in attrition, that was over 100% and 104%, with the remaining performance obligations that were higher. So with that said, the company did increase their guidance for the full fiscal year to quite a considerable increase, I would say, between 10 and 15% for the full fiscal year. And it's important because if you look at the last four quarters, excluding the reported one they just had, sales were around 6%. And so this is going to ratchet up the earnings growth estimates overall for the business. And with that said, I do think that's why some of the analysts are quite constructively bullish. D.A. Davidson's got a $45 target, and of course Morgan Stanley 38, with Bank of America at 40. Both of those firms either maintain an outperform or a buy rating.
It's interesting that you talk about some of the competition here, of course, Google and also Dropbox for that matter. I mean, because you just wonder how it differentiates itself from that. But as you mentioned, perhaps moving into e-signatures, I mean, we've all sat there and done our signature a million times to sort of get it right. But it is obviously something that is important. I mean, is that going to be, enough? Is that what you're seeing as far as what companies are doing to try to gain a competitive edge here, is to try to sort of set themselves up as a sort of more one-stop shop?
Yeah, so what's happening here with this business, it appears, at least to me, that they're moving towards enhancing, or if you will, economizing on multiple businesses. One of the things I noticed, or two things I noticed, first is their e-sign business, because I follow a lot of stocks over time. When I look at the e-sign business, I always think about Adobe and DocuSign. So typically industry groups in a specific field or business concentrate into two or three. In other words, a duopoly or an oligopoly. So that may be the case here with Box being in this business. The other thing is the data collaboration, but the data structuring business. So recently, MongoDB, for instance, reported that MongoDB's business is in data structuring business. So they take unstructured data and they structure it using technology and artificial intelligence. So that is also one of Box Incorporated's enhancing businesses going forward. But outside of that, I think the value proposition has always been for this company that, if you want to use storage solutions and collaboration solutions, but you don't want to use operating systems or productivity tools like Microsoft's Office Suite, you could use companies like Box. So you could use them on an agnostic basis, which, for many businesses is a value proposition. They don't want to be tied into, getting, Microsoft Teams or the collaboration tools because they buy another product. And so maybe there's, the rationale behind maybe small and medium-sized businesses that like the agnostic component of their business. They seem to be growing in other businesses, like I mentioned. New technologies, longer-term contracts continue to expand, and cash flow is improving. And so for what it's worth, all of these metrics line up for a potential continuation higher. But I will say this, it's not a huge growth story. And if you look at the last 3 years, the stock is nearing now the lower end of a 3-year trading range between $30 and $38, which again, it could essentially go to the higher end of that trading range. And I think that also corresponds to why many of these analysts have a high 30s or maybe a low 40s price target on this name.
Yeah, it certainly was outperforming as far as the year-to-date performance there. I mean, in around the middle of the year, but we're still a while off from that $38 that it hit sort of around July. But yeah, it looks like it is very much clawing back, at least off the back of some of this. George, thank you so much for getting us across Box today.